So inflation is sticky, prices are rising, and rate cuts are actually drifting further away than we expected. So today we're going to unpack exactly what is driving inflation, what the capital cities did in October as far as prices go, and basically look at what the major banks are predicting for rate cuts to go forward. Do you believe the government or the experts? Up to you. But those first home buyers that are missing out are driving the price up still. But increasing interest rates will not bring down electricity prices. Let's be clear with that.
Isn't really changing much on the electricity front because they're still charging the same amount to the consumer.
Migration levels are still very high and confidence is improving. So people are starting to realise that maybe the rates are going to sit here. I'm going to stop waiting. I'm just going to buy now.
So everyone's aware that the RBA did hold rates recently. And the primary reason for that is inflation. But like Brad said, we'll unpack it now.
So we'll jump straight into the inflation part. Obviously, that's a huge topic at the moment. So for people that don't really understand what inflation is, we'll give you a basic outrun. It's basically it's an increase in price over a set period in time. So if a carton of milk is worth $10 and then it's worth $11 a year later, it's gone up 1%. Basics of it. But what happens is, 10%. So what happens here is each of the inflation figures, it's broken down into a category. So, housing, I'm just going to run through a couple of them, but housing, recreational, culture, transport, food and insurance, they're the ones that we're going to look at. So the biggest one that has been affecting inflation for the last couple of years is housing as a category. And then a subcategory of that is actually electricity. So electricity increased last quarter by 9%.
Which is huge for a quarterly figure.
That's a quarterly figure. So the yearly figure is 23.6% year on year. Now, this is one thing that I always hate is one of the biggest triggers for the RBA to control inflation is increasing interest rates. But increasing interest rates will not bring down electricity prices. Let's be clear with that.
Yeah, exactly.
It will not. So some of the things that increasing rates do affect, recreational and culture, that's at 1.9%, which is well below what their target was. Transport at 1.2. Again, arguably you can't really control your transport, but if times are tough, you do catch public transport, so that's an arguable one. Food is at 0.7%. So Coles, Woolies, all those places, they've calmed down.
That's the thing. It's like there's too many different dynamics at play because some is almost direct influence to consumers. But with electricity, yes, it's direct, like consumers use the electricity, but there's a monopoly of people who are providing the electricity. So increasing the interest rates isn't really changing much on the electricity front because they're still charging the same amount to the consumer.
And I would argue that some of the reasons why they're so high at the moment are the government's fault. And the other one is rates. So house rates have gone up 6.3% in a quarter, which is the government.
That's across the board. But when you look at it on a more micro level, the higher density, the higher the increase in rates.
Gas has gone up 6.7%. Rent has gone up 1%. So I would argue that some of those figures that are high are not going to be influenced or brought down by leaving rates how they are.
And that's the thing. In the announcement from the governor, she mentioned that the reason why inflation is so high, one of the reasons inflation is so high is because there's no new dwellings coming into the market because there's a labour shortage for trades. But like we just spoke about, because property is so expensive to transact, it's almost encouraging people to pull out equity from their property and do a renovation. So the trades are going to renovations instead of new dwellings.
Which isn't adding more stock.
Which isn't adding new stock to the market, but it isn't adding existing stock to the market. So there's just a lack of supply of existing dwellings and new dwellings.
And no tradies.
So I don't think holding rates is the best approach, but the problem is it's so dynamic and so many influences, so many factors influencing this decision.
Another trigger that can affect inflation is regulation. And I think this is one thing that people start jumping up and down about is, electricity prices have gone up 9%. quarter on quarter. So I did a bit of research, if you want to call it that, on as to why they're going up. The main reason is an aging infrastructure. So coal plants are aging, they're breaking down. They're at the end of life.
Yeah.
The coal prices and gas prices are extremely high at the moment. There's a lot of investment within that sector, which is counted as inflation into renewables.
Yeah.
So that's very expensive to set them up.
It is like investment into renewables, but there's the investment into renewables, and then there's the adoption of the renewable energy to the consumer.
Yeah,
and when you go and put solar panels on your property, I've got solar panels on my property, but I don't have a battery. For me to feed that into the grid, I get basically no rebate.
You don't get anything.
There's no deduction or no benefit for having those solar panels.
Correct. The only benefit is if you ran your aircon all day.
Yeah. During the peak times. Yeah. But it's like then I've got to go and spend $10,000 or something on a battery. It's that adoption to the consumer. And if you don't have a battery, you can't charge your electric car.
Correct.
So there's got to be some sort of incentive for consumers to adopt this renewable infrastructure.
And I think not relying on the government. So as you said, getting the batteries, getting the things, and having self-sufficient houses is the key. Not these huge wind farms and all these things.
Yeah.
Why not create, like if I'm going on a bit of a rant here, but if the electricity companies were not privatised, if it wasn't privatised, you'd have battery hubs in suburbs.
Yeah.
So you could have a whole town running off a battery pack in a certain suburb.
And it's not like
but they're never going to do that.
Well, there is a company. There's a guy, there's a billionaire in New Zealand who's trying to do it in around Australia, and the infrastructure's there because you've got substations already throughout suburbs supplying electricity. So you just change them over to batteries. It's a big job to do. There's a lot involved, but like you said, it's batteries. It's your solar panels feeding into those batteries, and then each house is drawing
and then it's
from
distributed at night.
Yeah.
You know, it's a no-brainer. But because it's commercialised and these big companies are making so much money off it, they're never going to want to do that.
There's no incentive for it.
Because once it's set up, there's no revenue for them anymore.
Yeah.
So that's enough of my rant. So we'll go now on to October price surges. So this is something that we said we're going to keep an eye on with the first home loan deposit scheme or the home guarantee scheme that's come out. So prices did jump.
So it's only been a month since that policy's taken place. And for this to happen within a month, like it's pretty significant because data does lack, because a lot of the transactions that are being recorded, if a property sold in the second week of October, the settlement doesn't actually process until late November, early December. So the fact that this has already started to increase, I would suspect that November, December is going to be even more than this.
Yeah. Oh, 100%. When we get the quarter figure, that's going to be the big one. But Perth went up 1.9%, Brisbane 1.8%, Adelaide 1.4%, Melbourne 0.9%, Sydney 0.7%, and Hobart 0.3%. So your typical ones, Perth and Brisbane, are still performing really well.
You think about that for a medium price of, say, 1.5 million. If you're talking about a property in Sydney, 1% of 1.5 million.
It's gone up a lot.
Yeah, it's moving pretty quick.
So stock levels are ultra tight still, as we've already mentioned. There's fewer homes for sale. It's as simple as that.
Yeah.
Migration levels are still very high, and confidence is improving. So people are starting to realise that maybe the rates are going to sit here. I'm going to stop waiting. I'm just going to buy now.
Yeah.
You know, and I would highly suggest for anyone that is waiting for rates to drop, stop doing that and just go and buy, because it's not going to happen in my opinion.
For anyone listening, if they have been in the market, I'd love to hear what boots on the ground feedback is for different markets, because I know personally the sub $900,000 mark in Newcastle and Maitland has been stupid. Over the past month, we're seeing 40 to 50 groups through, like a freestanding house, sub 900,000. Multiple offers coming in Saturday, Sunday and Monday. And for multiple properties that I've been negotiating, it's just been best and final by 5 p.m. because there've been so many offers.
And the thing is, at that price point, you're not getting a bargain. So if you're first home buyer coming through seeing, well, I know we've harped on about this a lot, but if you're seeing price guides, just base it on comparative sales in the area, not on what the price they're telling you it's worth. So do a bit of research and think, well, the place up the road, which is very similar, sold for 1.5, but they're listed this at 1.2.
And always take into consideration that monthly change as an opportunity figure, because if you've seen a comparable sale that's 2 months away, but that market's grown. Perth has grown by 2% this month.
Yeah.
So if that property sold for 830,000, the market's grown by 2% that month, but it's been 2 months since that property sold. What's the opportunity cost if you miss out on the property and sit on the market for another 2 months?
Yeah.
It's like...
And so I did try and do a bit of research to see if there was any evidence that it linked back to the first home guarantee.
Yeah.
Now, the government is, of course, saying no, it isn't. It's just a coincidence. They're saying only 1 in 10 purchases in October to use the guarantee. But I would argue that at that sub 1 mil level, it's driving competition.
Yeah.
And the people, the 9 out of the 10 are investors or downsizers that have got more cash.
Yeah.
It's as simple as that.
Yeah.
But those first home buyers that are missing out are driving the price up still.
Yeah.
So even though 1 in 10 purchases only use the guarantee, the 9 that didn't get the win are driving the prices up, in my opinion. So they're basically, the Treasury saying it's a small impact, but most economists, so I did a bit of research on it, most economists are arguing that the demand that they're pushing is increasing prices.
Yeah, which is what you just said.
Exactly what I just said.
Cash buyers, downsizers, or families upsizing. First home buyers are competing with a big portion of the market who have money.
Do you believe the government or the experts? Up to you. So wrapping things up, obviously we were hoping for more rate cuts, especially just before Christmas. That would have been fantastic for most people.
Yeah.
But the inflation figures really, shat on that. So
well, it's probably a good thing that they have held, because the market growing at that rate is pretty significant.
Correct.
And if that's happening with interest rates at this level, inflation's increasing, unemployment's increasing, but the market's growing probably because of this first home guarantee scheme. It's probably just worthwhile to
it's a hold.
See this out, let the rate hold the rates, and then let them use that lever later on down the track.
And what prior to COVID, rate cycles increases or decreases were always a 3-month wait.
Yeah.
Then it got to COVID and it was like, it's up and down real quick. They weren't giving enough time for things to really start to stabilise.
I know that you can't look at the property market and compare interest rates in the property market to decades ago, but it's always interesting that people compare property market from 1950 to 2025, but they don't compare interest rates at the same time. It's like, if you look at historically, 3.6% cash rate is historically low.
Yeah.
Not low compared to COVID-19 times, but based on a standard economic environment, it's still relatively low.
Yeah. So rates held steady, we know that, but the big 4 banks have changed their predictions of when the next rate cut, if any, will. So ANZ has shifted to March in 2026.
Yep.
NAB, May 2026. Westpac has given a range, so between May and August in 2026. And CBA has said no more.
I'm not sure if it was ANZ or Westpac, but I think it was Westpac who said that they've got 4 cuts before the end of the year on the last update that we did
and now
3 months ago.
They're going, nah, forget about that. That's the thing with these predictions. They're just that.
They don't know.
No one knows.
No.
So I think the biggest takeaway from that is nothing's going to happen before the end of the year. I doubt anything will happen in the first quarter of next year too.
Yeah. A big takeaway as well, I think, is it's 6 months from the first home buyer policy coming in October.
Correct.
Which is probably when prices are going to be stupid. That first home buyer policy isn't incentivising them to buy, and they'll just have to pull the lever on interest rates to stimulate the market.
And at the end of the day, it could all change again with the December quarter's inflation
100%.
figures. If it nosedives and it's well below the...
And it's at that time of year as well. Discretionary spending is going to increase. It's fucking Christmas, for God's sake.
Yeah.
So...
yeah, it will spike again.
Yeah.
So then I think they're just going, let's hold until mid next year, and then we'll look at it when everything's calmed down.
Yeah.
But that's it for today.
That's it.
If you have any topics you want us to discuss, throw us a comment and we're happy to run through them.
See you in the next one.
Thank you.